So all of these are called Japanese candlesticks. Japanese candlesticks are literally the most important thing that you must understand if you want to become a successful trader. So all of these are what we call Japanese candlesticks, like all this green and red stuff that you see right here. And what they do is that they show us the current price movements, like is there more buyers or is there more sellers in this market. Now I'm going to show you guys how these candlesticks are formed. So right now, this is what a candlestick looks like when it's opening, okay? And then right now, let's say the buyers come in to push the price up. So if the buyers come in and push the price up, then the price is going to go up like this, right? And then let's say right now, there is some sellers coming in to push the price down, okay? And then you push the price down, and then you will leave behind what we call a little wick behind right here. You can just leave behind a trail right here, because at some point of time, price literally got pushed all the way up here, and then before it got pushed all the way down, so it leaves behind a little trail like this. And then let's say there is more sellers coming into this market and push the price back down even further. So if you keep on pushing the price down, and then if you go below the open like this, guess what? It's gonna turn red color, because right now there is more sellers than buyers in this market. So once again, you will leave behind like the little trail, and then there is more and more sellers coming in to push the price down, and then you keep pushing the price down, and then suddenly some buyers start to come in and push the price up. So it will go up like this and leaving behind like a little trail once again, because if you recall just now, at some point of time, price literally got pushed all the way down here, right? Price got pushed all the way down here before some buyers start to come in and push the price back up, and then it got pushed all the way back up, and then it closed right here. Okay, let's say it closed right here. The candlestick pattern has closed, so it looks like this right now. So this tells us a lot of things, guys. You can see this was the lowest point price went to, right, before it like went all the way back up here, and then this was the highest point price went to before it come all the way down here. So this is what we call the close, and then this is what we call the open, because this was where it opened, right? Where it opened, like where the candlestick opened, and then this is where the candlestick closed at, and then this is what we call the low. Okay, this was the lowest point price went to, and then this is what we call the high, because this was the highest point price went to. So you can see this was a red candlestick because it closed below the open. So yep, this is the open, this is the close, this is the low, this is the high. So let's look at a few examples. You can see like this candlestick right here, right? This one right here. So how this candlestick was formed was that it opened right here. Okay, it opened right here. But at some point of time, price got pushed all the way down here. And then before like some buyers start to come in and push the price up, which is why it formed this thing called the low. And then buyers start to push the price all the way up here. It literally got all the way up here, guys. You can see right here. This was the highest point price went to. It got all the way up there before some sellers start to come in and push the price down, and it ended up closing right here. So in this case, this was the open, this is the close, this is the highest point price went to, and this is the lowest point price went to. And I forget to mention to you guys, but this rectangle here is what we call the candlestick body. And these two lines right here, these two lines is what we call the candlestick wicks. So this is the upper wick, and then this is the lower wick. Okay, so this is the wicks, and then this is the candlestick body. So here's another example. Let's look at this candlestick right here. So you can see price opened right here, but at some point of time, price literally got pushed all the way up here, guys. All the way up here before a lot of sellers start to come in and push the price all the way back down here. And then before it starts like go up a little bit, end up closing right here. So this was the highest point price went to, this is the lowest point price went to, and this is the close, this is the open. So you can see a red candlestick will close below its open, and a green candlestick will close above where it is open. So as you guys can see, there are a lot of candlestick patterns out there. So all these candlestick patterns will tell you guys whether you should go in for a buy or go in for a sell. Like example, when you see 3 green candlesticks in a row, that means you should go in for a buy because price is going to go up. So yeah, there are probably like hundreds and even thousands of candlestick patterns out there. But honestly, my advice to you would be, do not try to memorize all of these candlestick patterns. People who tell you that you need to memorize all these candlestick patterns to become successful are lying to you. The truth is, you really do not need to memorize all these candlestick patterns. And my honest advice would be to pick 3 of these candlestick patterns and focus on memorizing and mastering these 3. right? So for me, that would be the morning star and the evening star. So that is one of my favorite candlestick pattern. And then number 2 would be the bullish engulfing and the bearish engulfing. And then number 3 would be the doji. The doji. So these 3 are my favorite candlestick patterns. So when I see any of these 3 candlestick patterns on my chart, I will know what to do. I will know whether I should go in for a buy or go in for a sell. So this right here is what we call the bullish engulfing candlestick. You can see like the green candlestick is literally like so much bigger than the previous red candlestick. So this is the bullish engulfing candlestick. So it's literally like engulfing the previous candlestick, which is where the name comes from. So when you see this, you should go in for a buy because price is about to go up, right? So how this candlestick work is that you can see like the green candlestick is so much bigger than the red candlestick. This tells us that there is so many more buyers in this market compared to sellers. So if there's so many buyers, that means there should be a lot of buying momentum that is going to push the price up. And as you can see, price went all the way up here after it printed this bullish engulfing candlestick. And then right here, this is the opposite of the bullish engulfing candlestick. It is what we call the bearish engulfing candlestick. So when you see this candlestick pattern, you should go in for a sell. So you can see like the red candlestick body is so much bigger than the previous candlestick, which is the green candlestick, so much bigger. So when you see this going for a sell, and you see price went down after it printed this bearish engulfing candlestick. So another one of my favorite candlestick pattern is the evening star pattern. So it's basically looks something like this: a green candlestick followed by a candlestick with a small body followed by a big fat red candlestick. So you can see when you see this evening star, that means price is going to reverse and head back down, right? It's going to head back down. It's like a reversal candlestick pattern. So basically when you see this, you should go in for a sell because price is about to drop. And as it did, guys, once price printed this, price dropped all the way down here, guys. And then look at this. After price went all the way down here, what did price show us? The opposite of an evening star is what we call the morning star right here, the morning star right here. So it's a red candlestick followed by a candlestick with a small body followed by a green candlestick. So when you see this morning star pattern, you should go in for a buy because price is going to reverse and head back up. And it's the same thing, guys. It's the opposite of this. After you printed this, it went back up, guys. Look at this. It literally went all the way up here. And then once up here, guess what? It printed the evening star, and then it went back down again. So that is why it is so important to understand candlestick pattern. It will allow you to identify when price is going to reverse and like go in the other direction. So you can see when you see this evening star, enter for a sell. When you see morning star, enter for a buy. And then when you see this evening star, enter for a sell. So another one of my favorite candlestick pattern is the doji, which is this one right here, guys. You can see this is the doji. Okay, so how the doji was formed was that price literally went all the way up here and then it got pushed all the way down and it ended up closing like this. So a doji is basically like a candlestick with like a very small candlestick body. You can see right here is a very small candlestick body. So what the doji tells us is that the market is indecisive. So price might be reversing. So you can see right here, price was making like a beautiful downtrend, right? It was just going down. But after it printed the doji, it starts going up. Because this tells us that the market is indecisive. The market don't have enough strength to continue pushing the price all the way down. That is why after this doji was formed, price went up. So yep, those are my 3 favorite candlestick patterns. So what works for you might not works for me, and what works for me might not works for you. So seriously, guys, you need to really take some time out and like figure out which candlestick patterns work for you, which one of these are your favorite candlestick patterns, and then execute the trade without any hesitation when you see them.